Well, hi there, and welcome back to another episode of Let's Talk Real Estate Investing. I'm your host, Sharon Vornholt, and I'm so happy you're tuning in today. I'm excited about the show today because you are going to discover how one investor turned his goal of creating a lifestyle business through real estate and passive income into reality. Let's face it, a lot of people have that dream, but it's the turning it into reality piece that I want to talk about. My guest today is Brian Davis from SparkRental. Along with his wife and daughter, Brian spends most of the year abroad traveling and living by his own rules. He is a real estate investor, a personal finance writer, and the founder of SparkRental with over 2 decades of real estate and finance industries experience. He's written for many publications, including Inman, U.S. News, and BiggerPockets, to name just a few. But he really loves showing others how they can create their ideal lives through real estate investing and lifestyle design. So welcome to the show, Brian.
Sharon, thank you so much for having me. I'm excited to be here.
I wanted to talk a little bit about how you got started in real estate and where you are originally from, because I know you've lived a lot of places. So tell me a little bit about that backstory.
Sure. So I grew up in Baltimore, Maryland. Spent my entire childhood there and much of my adult life there. I fell into real estate kind of by accident, like so many people. I graduated college. I had no idea what I wanted to do with my life. I started interviewing with some of my friends or my parents' friends just to try to get a sense for what people did. Because, when you're a kid, you grow up and you know about like 6 different jobs, right? Like teacher, firefighter, police officer, and maybe 2 others. But, I had no idea what people actually do. What do people do at 11:15 on a Tuesday morning, in their jobs? So, I was trying to get a sense for what my parents' friends were doing. And I interviewed with this one guy who owned a subprime mortgage lending company, which you probably remember in 2003 was all the rage. Everyone was doing that. And he offered me an internship, which I didn't know what else to do with my life, as a recent college grad. So I took it. And it turned out that he and his partner, the other guy who owned this mortgage lending company, they didn't need another loan officer or processor or underwriter. What they really needed was they needed somebody to handle their own private hard money loans that they were doing with their own money. So I started doing those and, of course, working with real estate investors who were flipping houses or, doing BRRRR deals, but, who needed those short-term purchase rehab loans. And it was exciting, right? I mean, this is the early to mid aughts. Everybody's making money hand over fist in real estate. And I'm watching all these guys do this. I'm like, I could do this too. I could make a bunch of money. And I had that realization that if you have enough rental properties, you could potentially not work anymore, right? The rental income could cover your living expenses. This is before the FIRE movement, of course. So I didn't have that catchy phrase for it. But yeah, so you probably know how that story ends. When I bought a bunch of properties.
I was there. Yes.
Yeah. Yeah. So it didn't end any better for me than it ended for anybody else. I bought a bunch of properties thinking that I was very clever, and then lost my shirt in the crash. But that was how I got an introduction to real estate.
That's all very interesting. So you lived here before you decided to become this digital nomad. So it's interesting, though, that you took that job, because I really wouldn't think that would be an entry-level job so much.
There's not a ton to, you don't have to be a CPA or you don't have to be a rocket scientist, as they say, to do that kind of work. In some ways, it's more sales and marketing related work than anything else. You just have to learn how to evaluate deals, right? Yeah. And if a loan comes your way and the deal that the investor is trying to do looks promising, then I would take it to one of my 2 bosses, these 2 guys who owned this business, and I'd say, here's the deal, here's the premise behind this deal. Yay or nay, basically. I mean, that's hard money loans are so informal. At least they were at the time, and it was with this small lender. So yeah, I mean, it really was, it is private money in its purest form, where, literally it was just a thumbs up or thumbs down from the owner. And if they liked the deal, they would either lend their own personal money, or they had friends and family that would provide money for these deals. So yeah, I know it was informal. It was kind of fun, actually. I did enjoy it. The problem is, when 2008 hit, not only did I lose a bunch of money on my own real estate investments, but all my day job income dried up too, right? Because no one was doing those deals anymore. No one was borrowing hard money loans. So I had to go out and find a totally different job. And yeah, and that actually led to my first nomad experience. I took a job with an online company that was selling legal forms for landlords and other online services for landlords and small real estate investors. And this was 100% remote. This was a little ahead of the curve on the telecommuting. And my girlfriend at the time was a travel nurse. She had spent a bunch of time in Baltimore, but her contract was no longer going to be renewed in Baltimore. So she invited me to hit the road with her and travel around the country. And all of a sudden I had this job that could let me work from anywhere. So I said, why not? Let's go.
Mm-hmm. That's so interesting, because going back to the money part around 2008, you had a support system. I think that's most likely where you learned what a good deal looked like. Although what a good deal looked like in 2008 looked entirely different. The margin, you could be pretty happy with a slimmer margin than you can today. That was a hard lesson that everyone learned back then, about how much cash flow you actually needed to survive, because that was a tough time for so many investors. I knew investors that had large portfolios of properties, but they were not at the right level. They had too many lower end properties, and the banks started calling loans. They weren't late, mind you, on their payments, but till suddenly they were, when all their tenants lost their job. That was a snowball effect.
Oh yeah.
So that 2008, 9, 7, 8, 9, even 10 was a big period of education for all of us. So segueing into your first travel job, there are a lot of travel nurses that take their guys along with them, and they get the benefit of, well, the nurse gets to do what she wants to do, which is be a travel nurse, but there's a lot of synergy around that. So what was your first investing strategy?
So my first investing strategy was doing BRRRR deals. So the buy, renovate, rent, refinance, repeat strategy, where you buy fixer uppers, and instead of selling them as a flip, you refinance and keep them as a rental, and you pull out your down payment, ideally, when you refinance. So that was my first strategy. But the problem is, I was buying these deals in the mid-aughts, when everyone was properties were appreciating so quickly that you didn't have to underwrite these deals very well. And I didn't. I was so young and arrogant that I didn't know to go out there and find a coach or a mentor or a senior partner, or people to really teach me how to calculate cash flow accurately. So it was just, some of that is the hubris of youth, right? I mean, we've all been there. When you're in your early to mid 20s, you think that you can do no wrong, and so there was some of that going on, and that was compounded by the fact that, like you said, I was buying properties in these lower end neighborhoods in Baltimore City, which are really some of the roughest neighborhoods in the country, and I didn't understand just how many hidden costs there were in some of these lower end properties that don't show up on paper, right? Like even if I had been doing a normal cash flow analysis, or a more educated cash flow analysis, which I wasn't, but even if I had, a lot of the costs that come with these lower end properties, they don't necessarily show up on paper when you do that analysis. So I'll give you a quick example. These properties tend to turn over more frequently, and as a landlord, a lot of your costs in both time and money come from turnovers, right? So, you're not going to necessarily see those turnover rates on paper, even when you're calculating things like vacancy rates. Um, and, a lot of these lower end renters were pretty brutal on the properties, more so than middle income or higher income renters in my personal experience and in the experience of a lot of investors that I've talked with. So you have higher turnover rates and more abuse of the properties. You end up having to repaint, between every tenancy, recarpet in many cases, and that's thousands of dollars. That's your cash flow for the entire year, maybe more than your cash flow for the entire year. So, these are all lessons that I just didn't know going into it, and I had to kind of learn the hard way.
Well, it's called the School of Hard Knocks. It's college. And unfortunately, it's very costly. And I don't know anyone, and I do mean anyone that's been in this business for any length of time that hasn't had that problem. But I see that all the time. My oldest daughter manages property for a large an investor that has a lot of properties in the hundreds. He has single family homes, commercial, all different types of property. But by and large, the problem properties are those low end properties, like you said. And like my daughter says, they haven't been trained to be a good tenant. They don't know how to manage their money. They don't know how to take care of a property. They've never owned a property. Therefore, if you're in a step up property, even many times you get someone who needs a temporary rental. Maybe they're building a house or something like that. They understand how to take care of a property, but these people, they do such damage that you nailed it. You lose your cash flow and then some if you're in that market. It's not a market that I made the same mistake in buying some properties that were, I would say they were B- when I bought them. Quickly in 2008 became C's, became problems. That level of tenant, they're the ones that quit their jobs, lost their jobs, more so than this person with a stable job at UPS. So I think it's a cycle though of it's all these different pieces that you don't know when you're young.
Yeah. And, you raise a great point about property management and how, the lower end tenants tend to be the most work, but they're also the least profitable for property managers. So what happens is good property managers just don't accept lower end properties. They won't work with lower end properties. So that leaves you with kind of the dregs of property managers if you own lower end properties. So that's another one of these hidden costs associated with owning lower end properties that doesn't show up on paper, right? You just don't know until you've owned those properties that it's really hard to find a property manager, especially one who's competent and honest. So it's a niche, owning those really lower income properties, lower end properties. It really is an investing niche, and you have to have a specialized skill set to do it profitably.
And you have to be able to stomach the problems that come with that. And for many of us, it's just too hard. It's too much. I don't want to do it. I don't mind saying I don't want to do it. I've
neither.
done a little bit of it. So geographically now, Brian, where do you invest?
So now I sold off all of my single family rental properties and direct ownership properties. I now only invest passively in larger projects. So real estate syndications. I also have some money in real estate crowdfunding platforms as well. But I only invest passively at this point. And I aim for diversification above all else, basically in my real estate investments. So we have an investing club, and every month we invest in new syndication deals. But what we look for in those deals is diversification of every type. So geographic diversification, we want to invest in different states, different cities, big cities, small towns, as many different types of markets as we can. We also look for diversification among sponsors, among the general partners. So we want to invest with different sponsors around the country. We also want to invest in different types of property. So, industrial, multifamily, retail, mobile home parks, self-storage facilities, assisted living facilities, because, I learned the hard way that I'm not an oracle, right? I don't have a crystal ball that's any better than anyone else's. In fact, there are a lot of people out there who are much better informed and smarter than I am analyzing real estate markets, and they often get it wrong. So if they're going to get it wrong, I am certainly going to get it wrong trying to, predict the market or predict the ideal place to invest.
Mm-hmm.
So instead of doing that, I just try to invest every month, dollar cost average with my real estate investments, and spread the money as far as wide as I can.
Well, you've obviously been successful at that because of the life that you live, which is really one thing that I want to talk about. So was it your love of travel and the passive income, I would assume, that made you focus on this type of investing?
Yes. So being overseas, so we haven't talked about that yet, but I live in South America. We just moved to Peru. We were in Brazil before that. We were in Abu Dhabi before that. So being overseas, I'm no longer actively investing in individual properties. I'm not available to go oversee a renovation project or, go walk the streets firsthand to get to know a new market. And I don't love the idea of relying on single family investor partners for this. I'd rather invest with a full-time professional commercial real estate investor, who has a track record that they can demonstrate, and who is raising millions of dollars, and has to have enough trust with other investors to be able to do that. So that's one of the reasons why I made that switch over to fully passive investing.
So give me an idea. If someone wanted to make this switch, I mean, you can, if you have single family properties, you're going to have to pay capital gains if you don't do this right. But if you can't exchange somehow, but let's say someone said, I'm going to cash out and I want to do what Brian is doing. How much money do they need to start to begin to replace their income, and over what period of time? Are there any benchmarks that they wanted $5,000? We'll just pick a number, whatever number that is. I think people have trouble figuring out how much money do I need and how long is it going to take me to get to where I am Brian, or I can start to begin to be Brian.
Well, I want to put out there up front that, I don't consider myself financially independent at this point. I'm trying to build that nest egg, and we snowball our investments every month, and at a certain point your investments do take on a life of their own, and start generating plenty of income that you can keep reinvesting, at least if you're continuing to work. But there are three numbers that I recommend that people calculate every single month to keep track of their progress and kind of keep their eye on the ball. So one is your investable net worth. So that's basically your net worth minus any equity in your home, because equity in your home is not investable, right? It makes you feel good on paper, but it's not money that you can easily tap, and you certainly can't reinvest it elsewhere.
Right.
So investable net worth, keep an eye on that over time, track it every month, but don't get so attached to it that you can't sleep at night when the stock market takes a downturn, right?
Yeah.
Still worth tracking though. Second number to track every month is your savings rate. So that's the percentage of your income that goes towards savings and investments. And that includes paying off debts, by the way. That's part of your savings rate too. So, if you have credit card debt, for example, and, maybe you're not prioritizing investing at that point, but you're prioritizing paying off debt, that still counts as towards your savings rate, money that you're putting towards paying down those debts early. So your savings rate is really the source of your future wealth, right? That's the money that you are saving, investing, growing your nest egg with. So the higher your savings rate, the faster you're going to build wealth. And that also typically means the lower amount that you're spending each month to live on. So you'll have a easier target to reach as far as replacing your active income. And that brings us to the third number to track every month, and that's your FI ratio or FIRE ratio, depending on how you want to put it. FI being financial independence. You can add retire early on there if you want for the FIRE acronym. But your FIRE ratio, it sounds complicated. It's really just the percentage of your living expenses that you can cover with passive income from investments. So as an easy example, if you spend $4,000 a month and you bring in an average of $1,000 a month in passive income, you have a 25% fire ratio, right? You're 25% of the way there to financial independence. So track those 3 numbers every month. As far as benchmarks, one of the concepts that we love to teach is that you don't actually need to be financially independent. You don't have to be able to cover 100% of your living expenses with passive income in order to start living your ideal lifestyle and start living that FI lifestyle. And I'll tell you why. And so we've interviewed dozens of people who've reached financial independence, most of them through real estate. And they all went back to work, right? Because there's only so long that you can sit on the beach, twiddling your thumbs and sipping pina coladas, right? You get bored. So what do? You go back to work, but you do that on your own terms, right? Doing work that you are passionate about. Maybe it's work that is particularly fulfilling to you or that you find very fun. Maybe it's creative work. Maybe it's starting your own business, whatever it is, you're going back to work, but you're doing it on your own terms. But inevitably that work does provide income for you. So you don't need to be able to cover all of your living expenses with passive income. You just need to cover that gap between what your dream work pays, that ideal work that you would be doing if you were financially independent, and your living expenses if that number is smaller. So if you let's say that you spend $4,000 a month and your dream work pays $3,500 a month, then you need $500 a month in passive income.
Okay, so that's kind of the way I think about it. You're getting there gradually, but depending on how fast you ramp up. Some people ramp up faster and they use different strategies with more property, leveraging other people's money more. But I think there are many paths to getting there. But we talked a little bit about this show because I wanted to talk a little bit about how you and your wife manage this expat life. And you said that she is a teacher. So tell everybody a little bit about that, a traveling teacher.
Sure. So my wife's a school counselor, which has a similar paycheck as a teacher. She happens to be a college counselor. She helps high school juniors and seniors get into college. But the same applies to teachers as well. So international teachers tend to get incredible benefits. So we enjoy free furnished housing. We get free paid flights home to the US every year. We get full high-end health insurance coverage for the entire family. We get free tuition for my daughter to go to the school where my wife works. So great benefits. The salary is nothing special. It's similar to a teacher's salary. Now, the salary in international schools tends to be a little bit higher than the salaries in the US because, they're trying to attract talent away from their home countries, right? So you have to lure them away with something, but it's still pretty comparable to what a school counselor or a teacher would make in the US or another developed country. So that complements what I'm doing pretty well, right? Because her job provides a steady floor of income and great benefits for the entire family. My career as a business owner, it has no floor, right? I mean, there have been months when I've made no money at all, right? But there's also no ceiling on my income. So, I mean, my earning potential is much, much higher than hers as a business owner. And of course, as a self-employed person, as a business owner, I don't get any of those employee benefits like the health insurance. So that combination has actually worked out really well with her having a stable job with good benefits, me having an online business that has limitless potential income-wise. So that's been a good synergy, as they say in the corporate circles.
It sounds like a good fit, in that I like that she specialized in helping students as a guidance counselor. I said teacher, but I knew she was a guidance counselor to help people get into college. That I would think would be an evergreen niche, a job that, barring some worldwide event we can't see, or
the zombie apocalypse.
I mean, that should be something that it will always be in demand, I would think. And
Absolutely.
she certainly has special skills. What about the language barriers? how does that play into it? I know someone that would love to travel and live in Europe that hasn't done it because of the language barrier. And then I have another friend that just flat out moved to Portugal without knowing any of the language. She said, that's what I have Google Translate for. But she always had a dream to live in Europe. And as she got a little bit older, she said, it's now or never. And she just packed up and went. And she got her visa approved in like January of 2020, of all the worst times to get it approved. You know, she didn't even know she was going to get in the country, quite frankly, but she did. But I know I've talked to her and hear some of the challenges. Just the way of living is different. Some of the amenities are different, but if you have a strong desire to do it, you'll do it. But what about the language barrier?
Yeah, so our first stop as expats was the UAE, the United Arab Emirates, and Abu Dhabi in particular. So the UAE is bilingual, English and Arabic. You know, all the road signs are in both English and Arabic. All of the, the entire society is built around English. So that was a non-issue there. We spent 4 years there. After that, we moved to Brazil, where they speak Portuguese. And the language was more of an issue there. Yeah. And we were living in Brasilia, the capital city, which in many ways was an easy city to live in. You know, it's safe, it's wealthy, it's very walkable, but not a ton of expats and not a lot of people spoke English. So we really did have to rely on Google Translate. Including with our nanny, by the way. So we had our daughter when we were living in Brasilia, and we hired a nanny, a Brazilian nanny, who did not speak a word of English, had no interest in learning English. So I didn't really learn Portuguese. I'm slightly embarrassed to admit. My menu Portuguese was really good. My food vocabulary was great. My wife got almost conversational in Portuguese. She took it more seriously than I did. It was a little easier for her. I mean, she's working in a school with a lot of Brazilian kids and a lot of Brazilian employees. I was sitting in a co-working space doing all my work with people in the US. So I just didn't have that same interaction with people speaking Portuguese. We just moved to Peru, where they speak Spanish, and I have been taking it more seriously, trying to learn Spanish. I'm pretty committed to at least getting conversational in Spanish. But yeah, the language can be a factor to the extent that you want it to be, but depending on where you live, it doesn't have to be a factor at all. Like I said, you could move to the UAE and it's not an issue at all. Or if you move to a major city in Europe with a lot of English speakers, could be a non-issue. Or you can take the time to learn a new language. It's very good for your neuroplasticity and your brain, especially as you get older. It's just up to you how seriously you want to take that.
I think for my friend in Portugal, she is required to learn the language now. She's in her second year there, and there wasn't an immediate, you have to do it this week. But I know that she wants to learn some basic things. Like you, she's learned croissant, coffee.
Yeah.
She knows some of the food things.
Right.
And, like bus and things like that. But she finally started to get a little serious about it. She said, boy, this is not an easy language to learn, Portuguese. But so I wanted to ask you about SparkRental. So tell me about SparkRental. What exactly do you all do?
Sure. So our focus right now, our main focus is our real estate investment club. So every month we propose a new real estate syndication deal, a passive real estate investment like we were talking about a few minutes ago. Any of our club members who want to invest in it can do so. No one has to. The minimum investment typically for real estate syndication deals is quite high. It's usually 50 to 100 grand. That is not practical for a lot of people, especially working people. So that's one of the things that we do in our club is we pool our money together in order to hit those high minimum investments. So in our club, the minimum investment per deal is 5,000 if you want to participate in that deal. So it's still not chump change, right? But right. It's a lot less than 50 or 100 grand. Yeah, I mean, we charge a flat membership fee for this club. We don't take a cut of any of the money that's invested. If we were doing that, we would be selling securities. That would be a big no-no.
Right,
Um,
right.
So, not only do we not take a cut, we invest our personal money in each one of these deals to really keep our interests 100% aligned with our club members. So that's a main focus of ours right now, but that's not the only component of our business. We have a property management software designed for mom and pop landlords. Most of the property management software out there is designed for big property managers because that's where all the money is. Ours is really designed for the solo landlords out there. And then we
What's
have
the name of it? What's the name of it?
Our
The
software?
software.
Oh, you can it's SparkRental.com. You'll see
Okay,
the software
okay.
listed there. So yeah, if you come to SparkRental.com, you'll see our real estate investment club front and center. You'll see our landlord software front and center. We also are really big on education. We sell an online course. We also have a lot of free webinars, free courses. Our blog has over 400 articles. We do a weekly podcast. We do a lot of free classes, free video classes. So yeah, education is a huge part of our business as well.
That's awesome. And I'll be sure to put the link there. So Brian, if someone, we talked about this a little bit, but if for anyone that's listening that wants to go about building the same type of business model or similar business model that you have, what are some tips that you can give them? Where do they start? Oftentimes maybe they have properties, maybe that's their main business, or maybe they're part-time investors and they have a day job. And this whole idea of moving from point A to what seems like point F over here, it's a big mental leap for them. And I think this is true for a lot of people. What are some steps they could take to begin that transition? Or what is your best advice that you have for them?
Sure. So the first thing that I would look at is the income component, being able to earn an income from anywhere in the world. Now you can do that either with a job that's 100% remote, of course, which is way more common now than it was even a few years ago, pre-pandemic. So that's one option. You can also start an online business, like I did, and start building income that way. One of the easiest ways to do that is to build a content business, blog, podcast, video streaming, and have affiliate partners, and make money through affiliate marketing, basically. In the early days of our business, that really kept our business afloat. So, it was in the early days of our business, we had our blog, and we just on a whim, we were like, oh, a lender reached out to us about their affiliate program. Maybe we join it, and maybe we'll list some lenders that specialize in working with real estate investors, and we'll include links to them. And that turned out to be something that people were really interested in, comparing different lenders and seeing, what interest rates do they charge, what fees, et cetera. So that ended up becoming a source of revenue in our business unexpectedly. It wasn't the kind of business that we set out to create, but that's what people wanted, and it was a source of revenue. So, not that is going to be your business model necessarily, as someone who's starting a business, but that's an easy way to get started, is just to create a content business, an educational business, and include affiliate links to partners of yours. Obviously you have to be transparent about that with your audience, but it's an easy way to get started. You can also look into doing side gigs or side hustles that are location independent or remote. So again, in the early days of SparkRental, before it was profitable, I did some freelance writing on the side, mostly so my wife wouldn't divorce me. And but I ended up really enjoying the freelance writings, and I continued to do it to this day. So yeah, I mean, you can find these ways of earning money from anywhere in the world, and it takes some creativity on your part, going out there, finding ideas that are a good fit for you, your personality, your skill set, what you're looking to do. So to answer your question, that is the first component of it that I would look at, is just finding ways of earning income from anywhere, whether that's through a job, through side hustles, through starting your own business. And then the actual moving to a new country is sort of its own separate conversation.
Mhm.
Trying to find a place that will let you move there, right, legally, as with a visa
Right.
is part of that conversation. Now, one thing that is nice in today's world is that post-pandemic, there have been a lot more countries that have started offering digital nomad visas. So, these are not, you're not becoming a citizen, you're not getting a passport, but they will come and let you live there as a resident, as a legal semi-permanent resident, as long as you are able to provide proof of income from somewhere else, right? So those are some options you can look into. You can do some research on that. There are countries that sell what they call golden visas, where you buy citizenship basically, or buy residency, although I wouldn't necessarily start there. In fact, I would definitely not start there. But yeah, just look into, just do some research on countries that offer visas for people who have independent sources of income. And, you got plenty of options in Europe and South America and Asia. The world really is your oyster. You have way more options than you think you do.
Are they actually called digital nomad visas? Are they, is that what they're called?
Yeah, I mean, if you go online and just do a quick Google search for countries that offer digital nomad visas, you'll find lists of these countries along with some of the basic criteria for each one.
That's amazing. I did not know that.
Yeah, it's a thing nowadays.
This has been a fun show. I think it helps too. Since I know people that have sort of done this in one way or another. My hat's off to them. They're pretty brave. One of my goals was to become location independent so that I could work from anywhere. And I love that. I think a lot of people would like that ability to do that. Now, you can do that in one of many ways. I know someone that lives in Barcelona, Spain, that still invests in the US, and he does that through building killer teams. So he does it a little bit differently, but like you, Brian, he lived here originally, I think in Columbus, Ohio. So he's familiar with the US, but he's lived in Europe now for 25 years or something like that. So it's always interesting to talk to people and see the many different ways that they've managed to do this thing that involves maybe investing in another country, another continent even. So it's so interesting, but I think my advice is to find your own way. It has to be something that you like doing. Brian couldn't continue to do this if he didn't like doing it. I'm a content creator, so I'm a big proponent of content businesses. I think you can launch a lot of different things off of your content, whether it's a podcast or video or blogs, whatever. We've done all of those. But thanks again, Brian. And thanks for everyone that comes out and listens to the show week after week. Tell people what's the best way to get in touch with you.
Sure. So come to SparkRental.com. You'll see our co-investing club right there on the menu. You'll see information about our software on our blog. You can reach out to me personally over email, brian@sparkrental.com. You can email our company at support@sparkrental.com. We're on all those social platforms at SparkRental. But yeah, I mean, I answer every email personally. So, please don't be a stranger, reach out.
And I will put all those links in the show notes. I've got all of those. And I know SparkRental's been around for a while. So they're a good company. So don't hesitate to reach out and see how you could collaborate or how you can learn from Brian. He's got some awesome tools over there. So check it out, folks. And I will see you all same time, same place next week. Bye for now.